Can you invest in SBI Nifty Next 50 Index Fund? It's on another NFO which is coming up by SBI, and that is what you're going to see today. So, can you buy or not? Can you invest by SIP or lump sum? This is what you're going to see today. Hi, hello, this is Ganesh Santuru, your stock market profit coach and author of the book One Page Stock Market Plan. I help people in multiplying their money by investing in stock market, and today I'm just going to share about this NFO and why you can also try out this NFO. Okay, so this fund, if you look at, they are, about Nifty 50, which is the top 50 funds, and there is 51 to 100 and there are n number of funds. So generally it's a free float market capitalization, which means if the fund is performing from top 100th company, if the company is performing well, the stock will rise and automatically they will come into the top 50. And every now and then, every 6 months once, the top 50 will be reshuffled based on the market size and based on fund is performing better. If the market cap of a company is performing going up, automatically it will come in the top 50 and it will go ahead. So what is the advantage of this fund? Because they are going to invest, this SBI Nifty Next 50 Index Fund is going to invest in 51 to 100th company in India, which means there is a possibility of this company to become the next top 50 company. So which means market cap has to grow from 100th level to 51st level and then enter the Nifty 50. So there is a huge possibility of the company to grow, and you can also be part of this fund. And the best advantage is that they are passive fund. Yes, they are passive investments because they are going to replicate the next 50 index, and which means the cost of this fund is going to be very minimal, maybe 0.20 or zero point 0.3 maximum. That is going to be the cost. And let's look at the diversified stocks, the next 50 stocks, and 30% they are investing in these set of companies: Vedanta, Adani Green Energy, Avenue Supermart, InfoEdge. InfoEdge, Zomato, they are selling out and they are making a profit of 750 crores, and they are profitable, so many profitable ventures including Naukri.com. So that is one of the good company. And ICICI General Insurance, Dabur India, Apollo Hospitals, Adani Enterprises, Godrej Consumer Products, and Pidilite. We all know all these companies, all are excellent companies in their own domain. If you look at, 31% weightage is given to this top 10 company, and remaining companies forms a remaining, almost like the remaining index. Okay, so what is the advantage? These companies has the potential to grow to the next level. Once they grow, automatically this fund is going to perform, and as it is passive, the cost of churning is not going to be there, so hence the cost is around zero point 0.1 or zero point 0.3 max. So that is the cost level. And let's look at the returns what is generated by this fund by doing the back testing method. Okay, so 10,000 rupees investment invested in 2011 would have been around 34,270 in this fund alone, next 50 index. So you can see there is a drop down and still it is moving up one way up, and there is a huge drop in 2020 just because of COVID. Okay, so because of COVID, the stock has the entire stock market declined. This fund also declined, and just look at the rally which happened after post that decline. It has been enormous. So if you look at the last 10 years return, just look at the immediate 1 year return is just 62%. That is the kind of growth we had. And the 3 years, 5 years, 7 years, it's almost close to 15%, and 10 years return is close to 13%. And what is the advantage of this? Instead of putting in fixed deposit, you all know fixed deposit comes with a cost of TDS and every year renewal. And the returns had gone down drastically up to 5.5% right now. Whereas this Nifty index, it has given average 13% for the last 10 years, which is passive. And for the people who are looking at long-term returns and long-term better returns, this is one thing you can look at, because the cost is just 0.3%, so there is no cost involved. And as it is equity, if you are withdrawing 1 lakh, less than 1 lakh per year, the cost is going to be effective, right? So how you can invest right now? Right now, if you are a lump sum, maybe you can try out STP once the fund is launched. It will be the investment period is from, I think, April 29 to, I think, time period is till May 10 or 20. It's there, so you can get into this during this time period. My suggestion will be SIP, because looking at the current market condition, there might be turbulence in the next 1 year, so maybe you can opt for SIP. Lump sum, you can, but if you continue with SIP, you can. Or else, if you are going for lump sum, maybe you invest in SBI arbitrage fund or any other equity banking NPSU or ultra short term fund, do the transfer to this fund once the fund is launched. Maybe in the next 2 weeks it will be listed. Now it is a new fund offer period. Maybe you can look at investing through SIP mode in this fund. So hope this long term appreciation for sure will happen if you're looking at 3 to 5 years or even more. But currently the market is very high. Looking at the current market scenario, if you're starting an SIP, yes, you can go and do. If you're going for a lump sum alone, I'm just giving a caution for you. So thank you so much. If you have any questions with respect to this fund, kindly post it in the comment section. I'll be happy to answer this question. Thank you so much.